Good evening, ladies and gentlemen, or good afternoon, depending on what part of the world you're on, or I guess it could be good morning if you're in Australia. I hope everybody is having a wonderful Sunday afternoon. And welcome to our webinar reviewing the top-rated cryptocurrencies in the marketplace. Now, today's class is sponsored by X90, one of the world's leading providers of CFD, Forex, and stock trading, as well as cryptocurrency trading. And you can trade cryptocurrencies in the format of CFD with leverage, so it means you can ramp up your trading by using just a small amount of your capital to get a lot larger return on your investment. Now, when you trade with X90, you're trading with a regulated provider. They'll give you a free demo trading account so you can actually try out their crypto trading. You get real-time live market data and trading trends. You'll have no commissions. You can open an account for as low as 50 euros. You get a 100% deposit bonus. You're safe and secure. All your funds are secured in a European top-tier bank. There is also a top-level trading platform. Again, you can start funding your account with as little as 100 euros or your stock account with 50 euros. You get up to 500 to 1 leverage. That means for every $10 you put in your account, you can trade $500 worth of an asset. You get very tight spreads, and you get an easy-to-use trading platform. So if you go over to www.x90.com, you can set up a demo platform in no time at all. And once you've set up your demo, you'll open up the screen and you'll see exactly what we're looking at. All you have to do is locate on your left-hand side cryptocurrencies, and you can see the currencies that are available to be traded at the moment: Bitcoin, Ethereum, Bitcoin Cash, Ripple, Litecoin, and Dash. And then you see the prices are offered for it, and you can buy or sell. Now, in this case, you are trading. You are not buying them for ownership. You're using CFD trading. So you're only trading to make the profit on the difference of when you open a trade to when you close a trade. So in other words, when I did the screenshot, Bitcoin is trading at $4,013. And if you selected Bitcoin to go down, that means you were selling it now, you'll buy it back later, and Bitcoin fell to about $3,600 where it's trading right now, you would have made $400. If you would have chosen back when it was rallying to go up and you would have bought the Bitcoin at 40.35 and it went up to 49.96, you could have sold it and made your $900 profit. You don't have to worry about actually buying it and owning them. You're trading in the format of CFD. That's a contract for difference. So you choose the instrument on which you want to open a trade, click the buy button or the sell button, and you've chosen your instrument and which way it's going, you're trading it to go. You can use your advanced charts down below, and you can decide which asset, what direction you think it's going to go, how far it might go. You can then see your leverage by simply typing in the asset you want to trade, how much you want. You'll see exactly what the margin is or how much you have to have in your account to trade. Then you can click on close at profit and close at loss, so you can protect yourself from loss by setting a point to automatically close if your trade moves against you. You can click on profit to automatically close your trade and when a certain profit level is reached. You'll see all of your assets and your account information right here on the left-hand side of your screen. Down below, we'll see what you have available for trading, what accounts you have open, what trades you have open. And this is a demo platform. You can click on Start Tour, and it'll walk you through all of the steps to start trading with X90, one of the world's leading providers of crypto coin trading. So tonight's webinar is being recorded. To view this recording at a later time, you have to give us about 24 hours to get it uploaded, but just use the same link that you used to attend tonight's class. So let's talk about cryptocurrency and what is going on in the marketplace and what all of these currencies are that are coming out there at the moment. So as tech literacy of the population increases, acceptance of crypto as a legitimate store of value follows, and it has boomed. Titles along the lines of Bitcoin price hits all new time highs and Ethereum price surge are starting to proliferate all the news feeds. It seems to be all the headlines all around the globe, no matter what you're reading, not just financial papers anymore. What we know for sure is that people who were once skeptical of Bitcoin and the technology behind it are slowly understanding and getting increasingly involved with crypto. Now, when I say Bitcoin, we're talking about digital currency, cryptocurrency, digital coins. Bitcoin was the grandpappy of them all, as y'all know. So it's kind of become a generic term, although Bitcoin still exists and it's the biggest traded crypto coin out there. But a lot of times, instead of saying cryptocurrency, which is a big word, I'll say Bitcoin. You'll know the difference when we're talking about Bitcoins and when we're talking about Bitcoins as cryptocurrency. As of this writing, the market cap for the entire crypto space is at 30.9 billion US dollars. It was just $20 billion 4 months ago. So we can see the crypto space is growing exponentially. Now, you would have heard of crypto coins and altcoins. Now, all the other coins besides Bitcoin are referred to as altcoins for alternate coins. How was the naming convention started was because back in the days of 2011, forks of Bitcoins appeared in the market. The forks are closed. Each aspired to serve a niche area, aiming to be better than Bitcoin. Since then, countless new cryptos have emerged, eroding away Bitcoin's crypto market cap dominance, although they stay way ahead, and I think 82% of all trades are in Bitcoins. These altcoins are gaining market share at an alarming speed. 10 times or more growth has been observed at a short span as much as 6 weeks. Ethereum is the second largest out there, and it is right on the tail of Bitcoin. But does anybody realize that there are some estimates 800 different cryptocurrencies on the markets available now? Some say as much as 1,000. Now, we have to remember that cryptocurrency is all about social networking, social media, social commentary. Because the demand for a particular asset, crypto, whether it's Bitcoin, whether it's Ethereum, whether it's Dash, is based on the community that wants to buy and trade it. Because it's not like fiat currencies that in order for us to do business in London, we have to have pounds. Yes, we can convert anything to pounds, but everything around London is in pounds. But you don't have to have cryptocurrency. So as the communities for each one of these currencies starts gaining in members and in social media, the more they're traded, the more demand there is, the more value they go. So when you purchase some cryptocurrency, you are in fact buying some tech stock, a part of the blockchain and a piece of the network. Now, cryptocurrency trading is the forex of cryptocurrencies. This means you're able to trade different Bitcoins and altcoins, normally for US dollars or Bitcoins, or against each other. Crypto trading is an alternative way to get involved in the crypto world. Now, most cryptocurrencies are traded in what's called CFDs. Bitcoin and Ethereum CFDs offer a possibility to trade on cryptocurrency markets without the need for owning coins at all times. Now, as I said, there's 800 to 1,000 different types of crypto coins out there. Most of them have minimal liquidity. Most of them are not easily available to buy or sell because they're traded very thinly. So in most cases, you can buy it, but you really can't sell them. So you have to find a particular exchange, which is usually the official exchange of that currency being offered, and a wallet that will store them. So you have minimum access, but this is like having access to some, very small, untraded South American currency. Okay. So there are lots of them, and they're all hoping to grow. Like just a year or two ago, none of us knew about Ethereum. It's now gaining steadily in popularity. You can put it in most wallets, you can get it on many exchanges, and you can trade it in CFDs. So Bitcoins and Ethereum CFDs offer the possibility to trade on the cryptocurrency market without the need of actually owning any coins at all. A crypto CFD is a contract between the buyer and the seller, who typically the seller will pay to the buyer the difference between the current value of the crypto asset and the value at the end of the contract. whether it's up or down. CFD certificates are typically used for goods that are hard to store or own, like gold, oil, and barrels, and in this case, cryptos. There are many pros and cons of using cryptos to trade currencies. Although there are typically over 1,000 cryptocurrencies, only a handful are relevant. Of those, even less have a market cap above $1 million. Below is a list of important cryptocurrencies and additional resources you can use to learn more about them. Now, to start, because all of this sounds ridiculous, but to start a cryptocurrency, you simply need a very basic code, because the rest of it's all done for you because the blockchain technology has existed. Bitcoin's coding is open to the public, is an open source. So all you have to do is you can develop X90 coins or Barry's coins and use the blockchain technology, use a standard wallet sourcing, but you'd have to be your own wallet and your own exchange and your own money. So I could put out there 1 million Barry coins at a value of $1 a piece, but I'd have to get the people to buy them. But the most typical part is I'd have to get the miners who mine them. Because mining sounds like you're making coins, but you're not. You're earning tiny pieces of coin for solving the puzzles that are part of the blockchain technology. Because every part of this deposit, every movement, any transaction is a huge mathematical puzzle and takes huge computing time. And the miners make their money by having these computers network together to do the solving of the puzzle for each piece of the blockchain. And so if you don't have miners, you can either dump those million coins in the market and sell them for $1 million, you can find the buyers, but then you have no supply and demand factors. So in 2017, they really evolved and changed. Biggest change ever this year in cryptocurrencies. The list of currencies went from a reasonable thing to do to like an impossible task. We used to be able to talk about the few major traded coins in a brief introduction because we were basically trading with Bitcoin. Today, you can't even keep track of them. There are so many ICOs and so many coins on the market that they're virtually impossible to keep track of. But the most relevant crypto coins are Bitcoin, Ethereum, Litecoin, and we're going to take a look at each one of these tonight. Just a brief introduction and a brief review. So Bitcoin is an easy pick. It is the most relevant. It was the first major usable cryptocurrency. It has the highest market cap. Its coins generally trade at the highest cost of all cryptocurrencies. They were about $225 in June of 2015. But just this month, in September, rallied to almost $5,000. Despite the big increase in price, Bitcoin is the best choice for anyone entering the cryptocurrency space. It is the most familiar and invested in coin. It's a lot of things. Primarily, Bitcoin is the reason anyone is talking about cryptocurrency in the first place. You might not want to start a CPU-based crypto mining company in 2017 or start buying coins at $5,000 a pop, which is fine since you can buy fractions of a coin. But it's still going to take first place in our list of relevant coins, largest market cap, most information about it, most easy to trade. Here we go. I thought the Ethereum would. Okay. To Ethereum. Ethereum is probably the third on the list of important coins, if not second. And it is quickly growing. It doesn't have the longevity at the top like Litecoin, but it's built on a system that other coins are built on. Most ICOs, initial coin offerings, use Ethereum today. It has a less intimidating cost than Bitcoin and has the second highest market cap. On that note, Ethereum Classic is also notable. Ethereum is actually a spin-off or a hard fork from what isn't today called Ethereum Classic. Like Bitcash is simply a spin-off of Bitcoin. Now, the longest in the market besides Bitcoin, but the one that has got the least traction, has been Litecoin. Litecoin is the second most important digital coin. It had the third highest market cap in June of 2015, but today it sits closer to 7, despite the decline. CPU mining is still sort of possible. People know what Litecoin is. It uses essentially the same technology as Bitcoin, and it costs about a 50th to 100th of the price of what Bitcoin does, depending on the day. Really, a Litecoin is just like a Bitcoin before the whole Silk Road controversy. And as some people would say, a Litecoin is like a Bitcoin, except with value closer to a reasonable person would expect a digital coin to have in a rational market. Well, don't think for 1 second that Bitcoin, Litecoin, Ethereum, they might all move up simultaneously as the market rallies, but they don't move at the same percentages. So yes, Bitcoin could go up 10% and go up $500. That's a huge jump. But just because they climb 10% today doesn't mean Litecoin will trade up 10% or Ethereum will climb. Sometimes now, Litecoin is becoming less and less important to the market. So it's fallen to third place in our view. Like Bitcoin, Ethereum tends to get its own press. And with the growth of ICOs, has been eking up steadily. Okay, it's still far away from Bitcoin, and Bitcoin is not losing its market share, its attention, or its traction, because, like I said, Bitcoin is the granddaddy of them all, and it has become so synonymous with cryptocurrency that most people interchange cryptocurrency and Bitcoin. The thing is, most exchanges, when it comes to entering the marketplace, you have to deal with a wallet and an exchange or a CFD broker. CFD brokers offer all the major coins, so you have no problem there. When you come to a wallet to store your digital currency in, most of the wallets store Bitcoin. There's a lot smaller percentage of wallets out there that store Ethereum or Litecoin. So that doesn't limit the risk for investors. Okay. Somebody just asked, can we explain why mining is so hard? We're not here to discuss mining in the least. Okay, tonight we're just reviewing the top cryptocurrencies. Now, once you have a wallet to store your coins in, you have to be able to procure your coins. To procure your coins, you need an exchange. An exchange allows you to use credit card, PayPal, or whichever way you want to buy these Bitcoins. Okay. Yes, once you have a wallet, if your friend owes you some money and wants to pay you in Bitcoin, he can just put it in your wallet. But if you want to get the Bitcoins, or you want to sell the Bitcoins, or you want to trade Bitcoins and you think Ethereum's going to do better and you want to get rid of your Bitcoins and buy Ethereum, you need to do that through an exchange. Most exchanges today will handle, almost all the big ones handle all Bitcoin. A lot more every day are starting to handle Ethereum. As you go to the smaller currencies, even though they may be relevant, your choices get more limited. With Litecoin, because it's been around for much longer than Ethereum, it was integrated into lots of wallets and exchanges. So even though it's becoming less relevant and declining, it's still more readily available. So there we have Bitcoin, Ethereum, and Litecoin. They are the three most popular, most reliable, most well-known coins in the marketplace. We have quickly developing out there the new spin-off the new spin-off of Bitcoin, and that's Bitcoin Cash. Now, Bitcoin Cash is a spin-off meant to have faster transactions voted on and implemented by the Bitcoin community. It is too early to call, but this coin has a high market cap and could shape up to be a top player. Now, it uses everything from Bitcoin, and it's part of Bitcoin. But as Bitcoin has grown in demand, the blockchain technology and the time of doing transactions has slowed down. So Bitcoin Cash is using a little bit newer technology, still using blockchain, which makes these transactions move faster. Now, did we need a fork? Because when we talk about forks, they are still the same blockchain and they're still the same basic programming, but then they fork off and they have other things added to them. Because like I said, the source coding is open source. The blockchain is available to everybody. You just have to have the miners in place who are verifying the transactions and making them permanent transactions. Then we have a funny looking one, and it's still up there, and that's Dogecoin. Most of us know it by Dash. Okay. Its market cap was the 7th highest market cap out of June of 2015. In 2017, it's still a contender, sort of. Individual coins aren't worth as much as other coins on the list, but its value and popularity have remained relatively steady despite notable highs and lows. Dogecoin essentially uses the same technology as Bitcoin. Really, it's really a lot like Litecoin, a fairly priced coin with some degree of consumer confidence. Dogecoin has, one might argue, turned their comedic origins into an excuse to make the coin fun and friendly. It was actually started out by some programmers as a laugh. It's the only major cryptocurrency with a .com top-level domain name, and is one of the few that attempts to reach an audience outside of techies and cryptography nerds. With its zany story in mind, as of 2017, Dogecoin has really taken a beating in terms of value. One could argue that its roots as a joke coin wasn't a great long-term strategy as it had once seemed, although could be argued the volatility is seen as just a business as the usual cryptocurrency space. As the space is maturing, we're going to see a handful of coins that become relevant in the longer term of other types of markets. You can see, I mean, like I said, we have lots and lots of coins out there. There'll be other coins that fit in different places in the market, but we're probably going to see 5, 6, maybe 10 relevant coins that are available, all the wallets that are available, all the exchange that are becoming more useful in everyday work, everyday processing, everyday everything, where the rest of them are going to be relevant in because they're part of technology companies. And as the technology has grown and as blockchain develops and the individual technologies grow bigger, they will have a bigger market share, but they won't be used in the everyday type of demand. Now we have Namecoin. This is another one that's still up there in our top few, but has really fallen out of favor. In 2015, Namecoin looked promising. Here in 2017, there's very little less hype. So Namecoin is notable. Namecoin is almost exactly the same as Bitcoin. It was the first fork of the Bitcoin software. It is based on Bitcoin and has the same unit cap, but has a few tweaks to how the data is stored. Namecoin was originally going to be used as an upgrade to Bitcoin, but people were nervous that it would pose issues. So Namecoin is basically Bitcoin, but like everything not Bitcoin is worth just a fraction of Bitcoin. Its solid background and reasonable price points make it a relatively good coin to invest in. Of all the coins noted so far, Namecoin has performed the most poorly so far. It is still priced very low in terms of US dollar, but it holds a large enough market cap that it's not going away. Then we go to dark coin. This is the one that dark coin is Dash. Dark coin, known as Dash as of March 2015, was Dash equals digital cash, but previously known as Xcoin, is the most unique of the coins we have discussed so far. Xcoin was developed by Evan Duffield, who wanted to improve on Bitcoin but didn't have the pull to do so, and thus developed his own coin. Essentially, it uses less power to mine Dash than most coins. Okay, now why is that important? Okay, you understand these coins are tied directly back to the currency, because the Bitcoin technology, it's not the coin itself, it is the technology, because there is no physical coin, so to speak. It's the technology behind it. Now, the blockchain technology is what's growing, universally all over the place. But it takes a huge amount of computer power to continually monitor and process and do every one of these transactions. Miners are in the business of making money. They make the money by offering the CPUs of their computers, solving these puzzles and verifying every transaction in the blockchain stream. And they're paid very tiny, tiny little bits of money. So these miners are always looking for a way to do this with less computer power. And Dash was one of the ways that it used less energy to mine. And it's because mining coins is one of the most wasteful processes you can imagine. It's like, imagine in a banking system. What is the most expensive part to a bank to keeping your money and processing money? Keeping your money, putting it on a computer, outside of insurance, is what? Customer service, and the bank tellers, and the accounting department, every night having to verify every transaction. Okay. This is, mining is basically the overhead. Okay. The wasteful mining process key to security and stability of all Bitcoins that use the proof of work system. It prevents people from mining too fast. So we don't want to make mining faster, because this mining is paid in the creation of new coins. Because the miner, which is a business, doesn't, imagine you're mining gold out of a gold mine. Nobody's paying you cash. You're digging out the gold, and as you get the gold and you process it, you're selling it in the well. As they do so much computer processing, they get paid in a part of a coin. Okay. Now, the wasteful mining process, but it secures all of the stability. It's called proofs of work. We don't want the miners to mine too fast, because that would ruin the supply-demand flow, because we can only allow so many coins to be supplied, because otherwise, if you have an endless supply, they have no value. So, but environmentally is kind of a nightmare. Anyway, people know what a dark coin is. Hopefully, Dash is very popular. The word Dash, it's known. I mean, if you talk about Bitcoins and you say, name me the top couple of Bitcoins, you're going to hear right off the top of your head, Bitcoin. Today, now you'll hear Ethereum, you'll hear Litecoin, and you'll hear Dash. Those are the names people can most likely rattle off the top of their head. As long as people can rattle them off the top of their heads, they are good, solid investments, because they will continue to grow. They'll continue to offer in exchanges and continue to be available in wallets. So back in 2015, Dash was one of the higher value coins. Today, that is still true, and it has performed just as well as competitors like Ethereum. That means that there are some Dash millionaires out there for sure, because they've all gone sky high in value. Now, the next coin that we have on our list is NXT. Next. Okay. It is not a regular coin, and it is small in market cap and liquidity, but it is growing very fast. Now, not only does the nifty coin sport the name of Steve Jobs' other company, it actually uses a really cool and totally different algorithm for producing coins. This algorithm, an implementation of proof of stake scheme rather than proof of work is arguably less burdensome on the environment and has a long-term potential. It may be worth a tad less than other coins we recommend being worth about a penny on the dollar on a good day, but less coins per coin, less cost per coins means you have less to lose if the coin value deflates. Next is like Namecoin. Super cool code, didn't perform at the same levels of other cryptocurrencies until late 2017. But we see it having a long-term investment value. It is still priced very low in terms of US dollars. We see it growing in demand. We see the process, the technology growing in demand, which will send the next value upward over time. It is very thinly available. You have to find an exchange that you can get it on, and you also have to find a wallet to store it on. But they do have their own official exchange. Most coins have an official exchange. Okay, so if you can't find them, like if you go to www.bitcoin.com, or I don't know what they are for all the other ones, but there's one for Ethereum, and they will have their official exchange, and they will have a list of third-party providers that they are associated with. So you can always find a place. It's just the amount of choices you get will be limited. And remember, the pricing you get will be more limited. But Next has a good future potential. Then we have PureCoin. So there's a lot of them out there, probably that you haven't heard of. Like Next, PureCoin, which is abbreviated PPC, uses proof of stake system, in fact. It was the first proof of stake coin. It's worth about 40 cents on the for the US dollar and has a market cap of about 10 million. That's pretty good. This coin has everything going for it, and it's a fairly smart bet as far as cryptocurrency goes. Okay. If you get past the idea of cryptocurrency as a spending currency, something to buy and sell with at stores, and we're talking about on the investment side, the growth side, the investment side, the trading side, then and the technology side, then we see something worth going. So if we think of these coins as like Uber, even though Uber is growing in popularity as ride sharing, its net worth has nothing to really do with the ride sharing. Its net worth has to do with the technology and the network that Uber has built that can be applied to many other markets. So even if ride sharing was deemed outlawed in most of the world, Uber would lose that part of it, but its technology is what is worth the billions of dollars. Okay. So as an added bonus to confidence and quality behind the coin, PureCoin was developed by Sonny King. Sonny King is maybe the guy who created Bitcoin or this other coin, or maybe Bruce Wayne or Clark Kent or something. It's hard to tell as the culture of cryptocurrency puts importance on peer-to-peer code and coins over developers. Still, he is important, and like it or not, little things like this could be the deciding factor between a coin shrinking and swimming in a new market. Remember, as I said before, because these currencies are not associated with a country, they are concerned or are associated with a community. If there's a strong enough community and a strong enough miner network to believe in the future growth of this coin, it will continue to exist and grow. As that community grows, as more people become aware of it, that community will enlarge, and there'll be more people trading, there'll be more demand, and those currencies will. But as long as they have a hardcore community, that coin isn't going anywhere and will continue going up in value to kind of duplicate the market. So PureCoin has a story like Next or Namecoin, where they belong, where they are long-running coins. So we have other honorable mentions, and the fifth of the coin that I told you most people could name off the top of their heads is Ripple. I think it's really because people think the name is cool or it's easy to remember, because a lot of these coins have been around a long time. BitShare, Rise, NEO, NEM, Monero, and a few others all have decent values. Some even have better exchange rates currently than other top coins to pick. So make sure not to discuss the other four, to not to miss to dismiss the other forerunners. Okay, somebody asked me about NEM. Can you trade? I would have no idea. There are thousands of trading platforms out there. It is not one of the most popular ones. So you would have to find an exchange or a platform offering. I don't know. Okay, like I said, once you get out of the first top few, you have to go sort them out. You can go to their website and they will tell you all the most of the third-party providers, the exchanges where you can buy and sell them. I don't know. I mean, there's 1,000 coins to keep track of. Now, we can easily see one given existing altcoins or even new coins spring up to the top list at any moment. Okay, now they're not going to pass, not in this year or next year, probably Bitcoin. Ethereum, like I said, is the front runner, but that doesn't stop somebody because the market is so thin. All it takes is one coin to gain a lot of headlines and rally up there, or a couple big investors. Why is Ethereum up there? Because all the ICOs are using them. Microsoft is part of is incorporated them. So they are growing exponentially because of the headlines, the press, and where the technology. So the cryptocurrency market is young and volatile. So you have to be on top of it. It's changing it all the time. It's a fun market. It's not like trading or investing in currencies or commodities. And, if you think about investing in oil or gold, I mean, some of these people have been doing, well, I've been doing it in agriculture for over 40 years. It's like, it's hard to get something new and exciting because it's all way down by old stuff. But now you have something new. You can invest in, you can buy, you can trade. Okay, like I said, you have to do some research. Okay, if you say to me, 5 years ago, you told me you wanted to trade the Chinese yuan, the renminbi, I wouldn't be able to tell you where to trade it. It wasn't until recently that it's available on some platforms, some Forex, and I don't even know which ones it's available on. But as it's grown in demand, as it's reached into the marketplace, because it has to trade it or invest in it outside of going directly to the source, it has to have liquidity. Okay, for somebody to sell you 100 NEM coins, and they, some paper tells you that everything's gone up in value and they've gone from 40 cents to $4, but there's no liquidity, there's no buyers, you can't convert it to cash. So these are things you have to look at. Imagine like penny stocks. Just because that penny stock goes on value, unless you can find somebody to sell it to, it's difficult. So in most cases, you'll have a hard time trading anything but Bitcoin, Litecoin, and Ethereum for actual money. You can trade most coins at online cryptocurrency exchanges, and you can use some coins to buy certain things online. But converting an altcoin into fiat currency generally means converting it to a major coin first. So like one of the exchanges I deal with deals with what they call Linden coins. So what I have to do is if I have my Bitcoins, I have to trade them into Linden coins, which has some value. It doesn't cost you money, but anytime you convert you lose a little bit of value. Then I can sell those Linden coins through that exchange into my PayPal account or to my bank account. So in other words, just because a coin has a value in US dollars doesn't mean that anyone is going to give you US dollars or pay the rate for your coins. This is more like selling stocks, often like penny stocks, or trading one baseball card for another than actually having money on hand. So keep that and the volatility of the markets and the coins in mind when investing. So one reason, if you're going to invest or trade, unless you're looking for a long-term investment or saying, it's at 40 cents, I'll buy 100 of them and I've got $400 to waste. Okay, and I'll put it away and see maybe in 5 years it's not worth 40,000 bucks. That's a smart move. Okay, to buy, you got 400 bucks to buy 1/10 of a Bitcoin at top market price. I don't know. Now, because I get a lot of questions about ICOs, Because ICOs are some ways how a lot of these coins are created, the new coins. So before we can start talking about investing in cryptocurrency and possibly making some profit along the way, we do need to discuss ICOs. And don't be confused with IPOs. The new hot item on the marketplace in the headlines is ICOs, initial coin offering. So let's get to the point. What in the world is an ICO? An initial coin offering is a transaction type designed to help spur up and launch new cryptocurrencies and give them some traction. Essentially, it is a fundraising tool designed to boost newly born currencies into the online market. The idea is that you invest currently launched cryptocurrencies into a new currency. You are favoring in an exchange of future crypto coins to the freshly launched or to be launched currency. So in other words, if I decide to launch Berry coins, okay, and I need the money to promote it, develop it, in other words, gain investors, I might offer an ICO and sell 1 million Berry coins. Now, 1 million Berry coins, as I say, each Berry coin's worth $1. Okay. But I'm not taking in real dollars because I'm trading out coins. So what I'm doing is I'm saying 1 Berry coin is equal, 100 Berry coins is equal to 1 Ethereum. So you're going to trade your Ethereum or a cryptocurrency you own and convert it into Berry coins because you're converting it within the same marketplace. It's somewhat simple. You give the launchers some Bitcoin or Ethereum and you get some of their future unicorn coins, assuming that they don't exist yet. In the fiat world, most financial institutions see the ICO transactions unregulated investments of cryptocurrencies where users can make Bitcoin or other digital currencies. The key word here is unregulated. Unlike shares or traditional IPOs, ICO coins, the representation of your investment into certain digital currency startups, aren't linked to any ownership rights and thus can be traded or exchanged at will. In the fiat world, this is a no-no. ICOs are essentially coins which you get by supplying someone with currently successful crypto coins so that you have a chance to make new future-proof and even more successful coins. Seems silly, but somehow these ICO transactions are actually making a huge buzz in the cryptocurrency world. It is estimated that nearly $240 million has already been invested in such ICOs, of which about $110 million was invested this year alone. Surely there is a reason for such huge movements of money. But when we talk about it, huge use in the world of investing, $240 million isn't a blink in a bucket. I read today, some bank is being 10% share in some bank is being sold for $1 billion. We think that people are constantly searching for that new and shiny cryptocurrency that will inevitably become the world currency system. Or perhaps this is the reason why investments into the research are so high. The research, and see, it's all about this research. It's about the technology. As this technology, and if one of these coins comes out with a better technology or improves Bitcoin enough that it becomes the blockchain that all the financial companies are using, then that coin will go up in value. And like I said before, if you're going to buy these, and it's going to cost you, for each Ethereum you have, you're going to get 100 of these coins, and these coins have a potential of going up. Even if they go up to $5 a piece, you got 100 of them. You made $5,000 bucks, or $50,000 bucks. So a lot of it's small investments for potentially large returns down the road. So you might say that the potential is already there via Bitcoin or some other already released currency. But the reality is that not everyone is on the same page. Those of us who are so-called nonconformists might be looking for something special in other places. So here's the problem with ICOs. As long as you paint a pretty picture and throw in enough cryptocurrency jargon at the unsuspecting investor, you are able to get away with keeping all the investments which were given to you at the start of some fictional currency and have never be heard of again. since anonymity is relatively easy to obtain online, and that's exactly what the cryptocurrency is about. Accepting the one Bitcoin payment request and never hearing from the so-called genius developer is a very sound and scary possibility. Our suggestion is to be diligent and careful with your ventures. Double check everything, including dates, claims, domain registration dates. If something seems odd or misaligned, run like you have no return. Because there is now, right now, many countries are starting to either ban them or outlaw them. You see, most of these ICO coin tokens are designed in ways that mark them as software pre-sale tokens. So essentially, your ICO coin is no different than a video game token that you bought before it launched. The main reason many developers choose to address these new currencies in such a way is to avoid paying all the expenses that come along with legal sales. In a similar manner, a developer of a newly found cryptocurrency might choose to say that his or her investors are donating coins to their cause or whatnot. So while this is completely acceptable and falls under the same reasoning for why Bitcoin was invented in the first place, to decentralize and stop all the crazy fees that go into making these investments happen, it's still relatively questionable. So the final word when it comes to cryptocurrencies, Bitcoin and many other cryptocurrencies are opening the doors to new types of digital money, which we think has the potential to someday become a leading currency of the world. At the moment, even the oldest cryptocurrencies are still maturing, and only time will tell where the genius invention is heading. From what we can tell, there's plenty of room for advancement. At the same time, Bitcoin has already revolutionized the digital world. So it all depends on where you want to be. Do you want to be Facebook and an investor in Mark Zuckerberg's Facebook before it went public? Or do you wait till after it gets public and buy later? Do you want to plant some seeds in an early investment in the hopes of a huge return down the road? Now, remember, if the cryptocurrency has legitimacy and is on the market, it might not have liquidity, but if the market for cryptocurrency like Bitcoin soars, it's going to pull the rest of them up along with it. So, which would you rather have if the market surges 10%? One Ethereum or 100 of these other coins? Because the other coins might surge 14%. So just be careful, because there is the potential for lots of scams. So be very careful, because human nature is to scam. So with these ICOs, look very, very close. Okay. And be aware. And again, watch market liquidity and everything else. Thank you very much, and have a great night now. Thank you for joining us, and visit www.x90.com. Good night now.